LVMH in talks to sell Marc Jacobs. What this means for fashion. Luxury giant LVMH faces a billion-dollar dilemma. Is Marc Jacobs' future hanging in the balance? Here's the big question luxury insiders are buzzing about. Will LVMH, a conglomerate that dominates global luxury markets, wave goodbye to Marc Jacobs, one of its most recognizable brands? Sources close to the discussions reveal it's a possibility worth a cool $1 billion. The deal that could reshape high fashion. LVMH has reportedly entered high-stakes negotiations to offload the Marc Jacobs brand, part of its portfolio since 2017. While details remain closely guarded, industry insiders suggest multiple high-profile suitors are already circling. Among them are Authentic, the owner of Reebok and a growing force in brand acquisitions, Bluestar Alliance, known for breathing new life into brands like Brookstone, and WHP Global, the parent company of Vera Wang and Bonobos. Why would LVMH want to sell? This prospective deal raises eyebrows in the luxury world. LVMH's previous strategy leaned heavily on long-term investments in iconic brands like Louis Vuitton and Christian Dior. So why entertain offers for Marc Jacobs now? Analysts speculate the move could reflect strategic priorities shifting toward high-margin businesses, or an effort to free up resources for blockbuster acquisitions. For instance, LVMH recently made headlines with its $8 billion purchase of Tiffany & Co., a move that signaled its willingness to expand aggressively in retail jewelry. Could Marc Jacobs' departure signal another major play in the works? What's at stake for Marc Jacobs? Tucked into the secretary filing cabinets, Marc Jacobs remains a powerhouse with a loyal fan base. The brand's edgy, artistic aesthetic often sets it apart from LVMH's more traditional luxury labels. Potential buyers like Authentic or Bluestar Alliance specialize in reviving dormant brands through targeted marketing and strategic partnerships. Think of Authentic's successful turnaround of Spider or Bluestar's work with Fry. But here's the question the luxury community is grappling with. Could a new owner unlock Marc Jacobs' full potential? Or would the sale strip the brand of its creative identity? A billion-dollar battle for brand legacy. If finalized, this deal would cascade ripple effects across high fashion. Marc Jacobs, under new stewardship, might see radical reinventions, like collaborations with streetwear influencers or deep pivots into sustainable fashion. Alternatively, the brand could fade into niche status, conserving a legacy that's currently at its most electrifying. But this is where our conversation becomes crucial. Should conglomerate like LVMH earmark resources for every brand in their stable, no matter the direction? Or does carving out smaller brands for specialized owners create healthier ecosystems where innovations flourish? The uncertain road ahead. As talks unfold, one truth remains crystal clear. This move speaks to broader tensions in luxury retail, between heritage preservation and market adaptability. Whether you're a fashion insider or a casual observer, this potential shift asks, can legacy brands survive without corporate firepower? Or do they thrive precisely when unshackled from conglomerate structures? Let the debate begin. We want to hear your take. Do you believe Marc Jacobs belongs in the hands of a specialized owner? Or should LVMH fight to retain such a distinctive label? Sound off in the comments below and join the conversation shaping the future of luxury commerce. LVMH announces $1 billion sale of Marc Jacobs. Key deal details. In a move that could shake up the luxury fashion landscape, LVMH, the global luxury giant, is reportedly exploring a sale of its fashion brand Marc Jacobs for approximately $1 billion. But here's where it gets controversial. This potential sale highlights the ongoing strategic shifts within one of the world's most influential luxury conglomerates. LVMH is currently in discussions with multiple interested parties, and sources suggest that a deal could be finalized soon. However, the company has not yet publicly confirmed these negotiations, as they did not respond to requests for comment from PYNTS. According to a report by the Wall Street Journal, LVMH has a well-known reputation for actively buying and selling assets to optimize its portfolio. Over the years, the company has made significant moves, acquiring iconic brands like Tiffany & Co. in 2021, and then divesting from others such as Donna Karan and DKNY in 2016. More recently, LVMH has sold its stakes in brands like Off-White and Stella McCartney, demonstrating a pattern of strategic asset management. Cecile Cabanis, LVMH's chief financial officer, emphasized this approach during a recent earnings call, stating, "We will not keep brands if we believe they are not a good add-on, or if we are not the right operator to run them." This candid remark underscores the company's focus on maintaining a portfolio that aligns with its core strengths and strategic vision. The broader context of this potential sale is tied to LVMH's recent financial performance. The company reported a decline in overall business results for the first half of the year, with earnings dropping by 22% compared to the same period in 2024. Factors such as currency fluctuations, a slowdown in tourist traffic, and comparisons to a particularly strong previous year contributed to this downturn. This period of turbulence in the luxury market is not unique to LVMH. As PYMTS highlighted earlier this year, the luxury sector is experiencing a shift. High-income consumers are becoming more price-sensitive, seeking better value and quality in their purchases. Industry leaders like Bernard Arnault have acknowledged that these are highly turbulent times for luxury brands, with many facing the challenge of adapting to rapidly changing consumer preferences. Adding to the complexity, tariffs have become the significant concern. In April, LVMH indicated readiness to implement mitigation strategies, including raising prices and passing tariff costs onto consumers, should trade negotiations falter. This proactive stance reflects the broader industry trend of adjusting to geopolitical and economic pressures. Looking back, LVMH's 2016 sale of Donna Karan International, its parent company of Donna Karan and DKNY, illustrates how the conglomerate has historically shifted focus. At that time, Donna Karan moved toward wholesale distribution and away from high-end apparel, diverging from LVMH's luxury-centric strategy. The sale, which netted around $650 million, was met with a modest rise in LVMH's shares, signaling investor confidence in the company's strategic realignment. And this is the part most people miss. The ongoing reshuffling of assets like Marc Jacobs isn't just about divestment. It's a reflection of a larger, more complex strategy to navigate a volatile market. The question remains, should luxury brands prioritize exclusivity and heritage, or adapt to the new consumer landscape by embracing change? Do you believe LVMH's approach will ultimately strengthen its position, or could it risk losing its luxury edge? Share your thoughts and join the conversation.